So are we still looking at the bullish year for 2023 for the stock market? Is the worst over, the worst that we have seen in 2022 in terms of the tech sell down, inflation? Is that over, and has the market actually bottomed? And it's kind of like pushing higher for 2023, hopefully leading to what we call a bullish market. Hey guys, Joey here, top 10 miser trader in Phillips Securities, and in today's video, we'll be looking at the main three stock market indices in the US, right? So we'll be looking at the Dow Jones, the S&P 500, and even the Nasdaq to see where we are right now and what has changed over the past few months. Have we actually bottomed out? Are we looking a little bit more bullish, or are we kind of like still dragged down by some of the negative news that have came out over the past few weeks, like the debt ceiling issues, the banking crisis in the US? Where are we right now? So make sure you stay all the way to the end as I dive into these three indices, right? Dow Jones, S&P 500, and even in this Nasdaq, right, to see where we are technically and if there are any signs of the trend actually turning up, and is it true that we could have already bottomed, all right, just like what I mentioned about 5 to 6 months back. I actually mentioned to some of my mentees as well that we could already have bottomed, all right, and now it seems like that is still playing out. We just need to stay above certain support levels. So let's just dive back into the charts for these three indexes to see where we are and how it looks for 2023. So let's take a look at the Dow Jones right here at about 33,348. So you can see that since like last year, we have sold off pretty badly. We have turned into what we call a bit of a downtrend somewhere at the beginning of 2022. All right, based on this moving average, you can see that the 100 days moving average has crossed down below the 200 days moving average blue line. So it's pretty much pointing down. We have what we call lower lows. You can see that the lows went lower and lower and lower, and finally somewhere around like October 2022, it seems like we have found this bottom right over here. So at that point in time in October or November, nobody would know that that is like the low, because we could actually like hit even lower and go to like 28,000 or 27,000. So nobody knew at that point in time. But what happens is that over the past few months, it seems like we have rebounded and stayed away from that lowest point. That means we have come rebounded and we are consolidating at a higher level. We are not even like going back to the previous low and even attempting to break it and hit lower, but we have rebounded and we are trading at a higher level. So that's a good sign. That's a good sign for the market. You can see right over here, we kind of like rebounded all the way to above that 31,500 level. You can see this was a little bit of a resistance, yes, turn support, and we are now back at this range, right, just above that 32,500 support level. Look at this right here. So 32,500, we have been pretty much trading above since like beginning of the year, and this is where we are right now at about 33,348. So that is kind of like the range, right? 32,500 to that 34,500 right over here, as the moving averages are all starting to point up and even consolidate sideways a little bit. You can see the 100 days moving average that I've talked about previously, right? Last year, you can see we broke down, I went all the way down, but finally somewhere around like January, Feb, this red line, the 100 days moving average, has crossed back above the 200 days moving average. This which can show that the trend has kind of turned, like in terms of the mid to long term, from a bit of down like last year to potentially moving up, right? And as long as we stay above certain support levels like that 32,500, this one right here, 32,500, and even that 31,500 right over here, well, I would say that it's looking quite bullish. It's looking quite bullish still. The market is pretty much just consolidating before attempting to find a new high. And what is that key resistance level that you want to take note of, right, to really see the move up, to see the upside momentum happen? Well, that level is none other than this red line right over here that I've drawn. This is what we call the resistance level, right? And this level is around that 34,600 level. You can see right over here, we kind of like neared it 1, 2, 3, 4, 5 times. 34,500, 34,600 right over there. That's where we saw a couple of touches. In fact, I think like last week as well, we headed to near it, and we sold off again. So 34,500 level, that resistance level is key. We can break above that level for the Dow Jones. I think that's where the uptrend can really start to form up quite clearly, all the way to maybe 36 to 37,000. All right, and you can see that there's a little bit of a pattern, a bullish pattern, that is what we call a bullish reversal pattern, something like what we call a head and shoulder pattern, right? So if you can see right over here, all right, this is something like a head and shoulder. So this is like the head, all right, head right over here, the lowest point, and we have a left shoulder and a right shoulder, and of course this is the neckline resistance. So something like this right over here, you can see that as prices head down, all right, we trade down, we got the lowest point, and right around here we found a bit of a right shoulder. So this is like the right shoulder here, this is the head over here, this is the left shoulder right over here. So we can break this, like, you know, neckline resistance level, like this red line over here, this red line as I mentioned, it would be that 34,500. If you can do that, right, you can break this red line, the 34,500, which is this thing right over here, well, then that's where we could potentially start to see that reversal, also based on this inverse head and shoulder pattern. All right, so this is the Dow Jones. Okay, so this is the S&P 500 index that tracks the performance of the top 500 largest company in the US, right? So let's take a look at this index right now. We are trading at about 4,136, right? 4136 right over here. So same thing like the Dow Jones. We have seen some sort of a bottom somewhere around like October and November last year. You can see we kind of like touched this level somewhere around that 3,500. We rebounded above it, and you can see that we formed a little bit of a higher support level. It didn't actually go back down to that 3,500. In fact, we have been consolidating above that 3,800 level. So that is what we call a higher support level. It's not like we are going back to 3,005, but we have found a higher support. So that's all pointing towards a good uptrend, right? Just beginning to form out, or a reversal from that downtrend that we have seen in 2022 to potentially an upwards moving direction for 2023. All right, so that's the first thing, right? A higher support being found. But what about the moving averages in terms of the trend direction? So same thing like, you know, Dow Jones, we got this, you know, 100 days moving average red line kind of like crossing down below the blue line. So early part of 2022 last year, when we had the, you know, tech sell down and, you know, inflation issues and all that, we have seen it, you know, form lower lows, lower highs. It kind of went lower and found that bottom. And over the past few months, finally, right, same thing right over here, the 100 days moving average, you can see this red line right over here, the 100 days moving average have crossed back up above that blue line, right? So both of these 100 days moving average, the red and the blue line, you can see that they are both pointing up right now. Does it make sense, right? It's kind of like both pointing up. So that's a good sign of the trend, all right? As I mentioned, just starting to point up. Of course, we need a bit more confirmation in order to push higher. We need to break certain levels. I'll come to that in a bit. But essentially, the trend could have already started to turn up, right? Just by looking at the moving averages, right? So in terms of the support level, 3,800, as I mentioned right over here, is kind of like the near-term support that. But over the past like 2 weeks to a month, we have found another higher support, and that would be the psychological 4,000 level, right? 4,000 level. So you can see that the range over the past few months is somewhere around like from 4,000 to about 4,200 level. This 4,200 would be key. You can see this is where we touched somewhere in February. We sold off, of course, due to the US banking crisis as well. We sold off, and about 2 weeks back, same thing, we neared it around at 4,002, and we kind of like sold off as well. So the range is about 4,000 to 4,002. I think it's like a 200 points range. We might just consolidate here a while, all right? And eventually, hopefully, if we break that 4,200 or even that 4,300, great. I think that is where the uptrend can really happen much faster for the S&P 500. That's where the market would turn more bullish, all right? And you can see that for this 4,000 level, this is also where the 200 days and the 100 days moving average line is as well, right over here. So it kind of like coincides with the psychological 4,000. So that level is key. All right, it's a pretty strong support for now. We want to stay above it, all right, for the uptrend to remain firm. All right, so this is the S&P 500 index. Looks pretty good, right, for 2023. So guys, if you like this video, I would appreciate if you can give me a thumbs up. That will really help out the channel. and thank you so much for doing this. And of course, smash the subscribe button as well, all right, so that you will not miss out on any videos that we do talking about the markets on certain stocks, or maybe some trading that we try to do every week as well. All right, so let's go on to talk about the Nasdaq right now. So the Nasdaq right over here trading at about 12,297. It kind of like, tracks some of the most popular tech stocks, right? It's kind of like a tech heavy index. So if you're looking at tech stocks, people are looking at the Nasdaq, which has sold off pretty badly last year because of the tech sector sell down. So you can see that last year we kind of hit the peak of around that 16,000, and we sold off by more than 37%, somewhere around 36%, around that 10,000 was kind of like the support level we found, and we kind of rebounded from there, right? So this is the Nasdaq, so we sold off quite badly, I think more than Dow Jones and even the S&P 500. And same thing, right now, it seems like there are some signs of the trend turning up, right? So let's just take a look at the 100 days moving average. You can see right over here, 100 below the blue. We broke down early part of 2022, and we were forming kind of like lower lows, it pushed lower and lower. And right over here, right, this is over the past 2 weeks. Let me just zoom it in for you right here. You can see that finally, the 100 days moving average has crossed back above that blue line, the 200 days moving average blue line. So that's a sign of strength, something like the Dow Jones and the S&P 500 that has already done that like a few months back, but Nasdaq was a little bit slower, but finally we are seeing that right now, right? And in terms of the support level, you can see that we have found that same bottom somewhere around like November, October, right over here. We touched, you can see we came back down, we didn't even near it, right? But somewhere around there we rebounded again, so something like what we call a triple bottom or double bottom around that 10,000 to 10,500 support level, and we have rebounded back up. And over the past few months, a higher support seems to have been found right around that 11,000 level right over here. That would be like the 11,000 level. All right, rebounded. All right, and as it consolidates, so there are some talks about the Nasdaq kind of like approaching getting out of a bear market. So what do you mean by getting out of a bear market? So when people look at like a bull market or bear market or a reversal, pretty much if you exit a bear market, it means that you have kind of like rebounded at least 20% from the low, right? So this was kind of like the low around that 10,000 mark. So let's draw it right over here, and we push it to where we are right now. You can see somewhere around that 21%, right? 21%. So it's just slightly more than 20%. So anything above 20%, that's a good thing. It shows that it has kind of like exited the bear market, all right? Exited the bear market, and it could potentially turn into what we call a bullish market, right? So this is that key level that you want to take note. Let me just change this to red in color. All right, red color, that would be like the 12,250 level right over here. You can see this is like the resistance level. We touched a couple of times, and it seems like over the past week we are attempting to break that 12,250, 12,200 to find a high, or to find a new high, this level that we have consolidated below for more than 6 to 8 months. All right, so that is a sign of strength. Hopefully we stay above that 12,200. Great. All right, that's where potentially we might push a little bit higher, maybe towards that 13,250 level. You can see right over here, that would be kind of like the next resistance level based on what we saw in August last year. All right, so this is the Nasdaq, and the news about the Nasdaq, as I mentioned, is kind of like a tech heavy index. We have like all the top tech stocks there, and I think all of you would know that about 2 weeks back, the Federal Reserve has hiked rates by 25 basis points, 0.25%, which is pretty much the 10th rate hike since March last year. And there are talks on the Fed has kind of hinted that they would finally pause the rate hikes, right? Potentially maybe even cutting rates at the end of the year. But that's a sign of change in terms of the sentiment, because all this while you're talking about rate hikes, and it will do whatever it takes to bring down inflation. But finally, after 10 rate hikes, he has kind of like hinted to a potential pause. So it's kind of like a bit of a change in direction. So that's a good thing for the tech stocks, where we have seen a couple of rebounds for many of those tech stocks that have sold off heavily over the past 1.5 years. All right, so this is the Nasdaq right here. Looks good as well. Same thing. There are definitely signs of the trend just starting to turn up, but we need to see a bit more confirmation in terms of it holding above certain key support levels. So there we have it, guys. I've covered the 3 most popular indexes in the US market: the Dow Jones, the S&P 500, and even the tech-heavy Nasdaq. So I hope you have kind of a better understanding of where we are right now in terms of the entire market. Are there signs of the trend turning up? When has that happened? Have we bottomed out? I hope you are clearer into some of the levels that you want to watch as well, especially if you are trading kind of like the indices or the ETF. I hope that helps. So if you like this video, guys, same thing, give me a like, smash the subscribe button so that you will not miss out on any videos like this. And Joey here, I look forward to see you in the next video. Take care.